All right, so let's go to the PowerPoint. So I'm pretty sure I brought this up a couple of times this week, how to short sell. Anybody have any questions on how to short sell or what short selling is? If you guys don't have any questions on short selling, I'll go ahead and get
Go over it
straight
again. What
into
is
it.
short selling? I missed that one.
Okay, so short selling, pretty much, short selling is a bet that the stock's price will decrease. So just like how we buy stocks traditionally to hold it for it to gain value over time. Like traditionally, we want to buy a stock for $100, and we want to see it go to $200 over time to make profit, right? Now, there's people that are that they short sell stocks, so now they want to they want to get into the stock at a 100, and they want to see it go to like 50, or in general, they want to see it go to the downside, right? Now, these people profit on the stock when it goes to the downside. That's what short selling is. All right. Now this is done. Short selling is done by the investor going to the broker. So me, I want to short sell GameStop, right? To give you a prime example for today. I'm the short seller. I think I'm Citron. I think GameStop is overvalued. So I'm gonna go to my broker, TD Ameritrade, and I'm gonna tell them I want to short the GameStop stock because I think it's overvalued, right? Now what you're really doing here is that you're gonna go borrow shares from the broker. So you're gonna borrow GameStop shares from TD Ameritrade at $50 per share, and you're expecting it to go down for you to profit. Right now, there's a small fee involved in doing these short sells. Obviously, you're borrowing the share from them, right? So they're gonna give you the share for whatever it's worth, as well as they're gonna charge you probably a little commission, like a two, $3, whatever, right, per share. Right now the short seller, I have my $50 per share stocks in GameStop that I borrowed from the broker. I'm gonna go to the market now, and I'm gonna sell my borrowed shares at $50. All right. Now I have $50 in my pocket. Now this all happens through the when you make that trade in TD Ameritrade. Pretty much this whole step one and two, it's automatically happen, right? So once you do that, you don't have to worry about going to the market or anything. It's already done once you go through your broker. All right. Now your share drops in value. GameStop drops to $40. Now if GameStop drops to $40, you're gonna go buy GameStop at $40 per share, right? And now you're gonna return the newly purchased shares at $40 back to the broker, right? So you don't owe the broker $50. You owe the broker the amount of shares you purchased. So regardless of whatever price it goes to, you're just giving them back their shares, right? So now I give back TD Ameritrade this borrowed shares that I got at $50, at $40, and I'm gonna pocket the $10 difference. So you guys see how you guys make money off of short selling? Any questions on that? You're pretty much pocketing the difference from where you borrowed it to where you returned it.
All right, I got you.
All right, cool. All right, so that's short selling. That's pretty much what that means. Now let's go over here to the chart. So I'll show you what happens now. In example, let's go up here. Now GameStop, now in the opposite way now. All right, so we went to, you guys remember this chart. Now you borrowed the share and it dropped in value. Now you made your profit, right? Now, if the share goes opposite now, if it goes up, I borrowed it at 50 and it goes to 60. Now the broker, yeah, you're borrowing shares from this broker, so obviously you didn't really pay for it from them. Now, there's people that want to buy into this stock at $60 for the broker, and the broker doesn't have any more shares available because he's letting you borrow it, right? So if I'm letting you borrow something and it's worth a lot of money, and I want that value. I would rather get somebody that wants to buy it from me instead of letting somebody borrow it. Obviously, I'm gonna come back to you and I'm gonna say, give me back my shares. I want them back, right? So this is what happened today. Um, GameStop went up. The broker comes back to all these short sellers and they tell them, okay, you have to cover your position. So when they say cover is a term in the stock market. It pretty much means you have to give us back our shares, right? You have to buy back in at whatever price the stock is right now. So when these short sellers cover, what happens is that they're artificially adding to the buying pressure on the stock towards the upside. Now, GameStop made this initial move to $60. Now I'm being forced to to close my short position and buy the stock, and that's gonna push the stock up some more, right? So that's what's causing this short squeeze, right? It's pretty much short squeeze. The people that are shorting the stock are getting squeezed out of their position. All right, so that's what happened all day today for about a whole from 10 a.m. to 11 a.m. to about it peaked out around 1 p.m. That was about a 3-hour move. All right, you guys understand that? Any questions on how a short squeeze happens?
So pretty much, all the guys that are buying are making their profit off of the guys who are being forced out.
Exactly. So
So
if
what
you look,
happens now?
hmm
So when all the people that bought those shares cash out now, what happens to all the excess stock? Are they going to short it again, or is the price value going to go up?
now, all right, so that's exactly what happened. So as GameStop, so obviously everybody was watching this line over here for GameStop. It was having a little pennant pattern over here. It got kind of tight. Its upper resistance level was around 45. That's why you see from when it broke 45, that's where it started to short squeeze. I mean, I was not watching. Like I stepped out for like just an hour just to go do something at work, and this all happened within that 1 hour. All right. Now you said what was the question again?
So what happens to the stock price as of now,
Okay.
since all these people are profiting off and all the short sellers got sold out? Once
Okay.
they sell their stocks that they're holding,
Mm-hmm.
that goes back and stays on the market. But are these people going to short it again, or is it more likely to go up?
Okay. So most likely these people are gonna try to short it as it goes up, but also look if it's going in an uptrend like this, obviously they're gonna be a little bit more scared to short it because this stock is showing a lot of momentum towards the upside, right? So usually if you see it right here when it hit resistance around 76 or so, that's where it started to drop. When these short sellers see resistance like this, they're like, okay, yeah, this must be the top. Let me get into a new short position. Because whenever something goes up this fast, it usually comes down at a very steep rate, like exactly what happened here, right? So GameStop got halted for about 10 minutes because it was too volatile. So when companies are moving, like GameStop was up about 75% for the day at its highest point. When a company is moving this volatile, regular stocks, like I told you, move like in a range of 5 to 10% or so, right? What it moved 75% today and it dropped about 25%. That's a lot of fluctuation for a stock. So when this happens, they're gonna halt the stock to let things cool down, right? Um, what happens is that when these people don't tell me, I'm gonna close my thinkorswim. All right, no, they're not. All right, what's gonna happen is that people are gonna start taking profits, obviously, because it's not gonna go up forever, right? You gotta be smart with your money. Once it starts pulling back, it's time to jump off the boat and take some profits off the table. Now, that's what causes the drop over here. People are buying it, but this is not people buying it because they want to buy it or because it's valued a lot. This is all shorts getting squeezed out and artificial buying that's pushing it up. All right, Travis?